One scenarios with you in our shareholder letter, and we believe that any of those outcomes are possible for the full year.
Okay, great, thanks. So let's now turn to the question that we
scenarios with you in our shareholder letter, and we believe that any of those outcomes are possible for the full year.
We had several questions centered around. Okay, great, thanks. So let's now turn to the question that we
scenarios with you in our shareholder letter, and we believe that any of those outcomes are possible for the full year.
We had several questions off at Nathanson, Harsha Jawawat at Bernstein, and Patrick O'Shaughnessy at Raymond James all asked about this topic. So Brian, let's start with your view on the current regulatory environment. What kinds of proposals or actions do you view as likely coming off of the recent events and commentary? And how should that be viewed for the industry overall? What does it mean for Coinbase relative to perhaps less conservative competitors?
Yeah, so the regulatory environment's been super interesting recently if you've been following along in the news and on social media, just recently with the Senate vote on the language in the infrastructure bill, which has kind of gotten a lot of attention. So, a couple things that I've taken away from this. I mean, the first one is that the crypto community has really kind of come out as a powerful constituent, which has, something like on the order of 20 million people in the U.S. who have crypto. We don't know exactly. But they're now actually becoming a vocal participant in the policy efforts around the U.S. And I think that's going to happen around the globe eventually.
Okay, I fixed it.
The other thing is that there's
is Leon on?
I'm on, dude. Can you hear me?
A number of our policymakers out there go to bat, really.
Yeah, I'm on. Can you hear me?
And,
I'm here.
The potential of this technology and what it can do. And others who still have quite a bit of skepticism or just frankly a lack of understanding. And so just like with the birth of the internet, I think there's a huge opportunity here for governments around the world to benefit from the economic growth and innovation that happen with crypto. But of course, some of the risks need to be mitigated, and that's an opportunity for us to go out there.
Yep, we got the audio now.
So,
right,
what is Coinbase doing? Well, really from the earliest days of Coinbase when it was founded, we made this decision that we wanted to go out there and be an educational resource with regulators and folks in government. Try to be the most trusted crypto company out there and really invest in compliance, have that kind of tone from the top. And we felt like that was a more difficult path to go on, but it was the right long-term approach that would pay dividends and really be a business enabler for us. And so we've continued that approach. We're doing that in a variety of ways. We just recently hired Faryar Shirzad, who is the former he's our chief policy officer and was previously the co-head of government affairs at Goldman Sachs, and he was also at the White House National Security Council member. So that's been great. He's building out his team, as you can imagine. Just having started, he's quite busy these days. We're also investing in something called the Crypto Council for Innovation, which is an advocacy group that a number of other companies in the industry have come together on, and we're using that as a vehicle to kind of go out there and educate. And so, I think we've always welcomed sensible regulation in this space. We basically just want to be treated on a level playing field with any other traditional financial services companies out there. And, I think unlike maybe some traditional tech companies that sort of have waited for something bad to happen and then they like reluctantly go engage with the government, I think we view it as our role to kind of go out there proactively before any kind of issue comes up, be that educational resource and kind of advise world leaders and finance ministers on how they can adapt their economies to capture the opportunity in front of them with the crypto economy. Central bank digital currencies are a hot topic, competitiveness with China, who's really kind of taken a lead on this. And so it's about shifting people's mentality from thinking about crypto as a set of risks they have to deal with to thinking of it as an opportunity. And yes, we can mitigate those risks, but that's actually not the most important thing in front of us. So that's what we're doing on the policy side.
Okay, great. And as a follow-up for Alicia, lending in particular seems top of mind, not just for SEC Chairman Gensler, but for states as well that have taken action against other companies. Could you talk about what types of lending activities Coinbase is currently engaged in, and what concerns do you have around scaling these efforts while also remaining compliant with any forthcoming regulations?
Thanks, Neil. That's a great question. So we've begun to build out a robust financing business. Today, we offer bilateral lending and post-trade credit to our institutional clients. On the retail side, our retail borrow product has seen growth, and we now enable our customers to borrow up to $100,000 against their crypto holdings. These products are offered through Coinbase Credit under state lending licenses that we have. It's important to note that today we lend funds off our own balance sheet. We are paying careful attention to SEC Chairman Gensler's public statements, and we're eager to understand the legal framework for the concerns that he has raised and how and if those may impact our product roadmap. As Brian said, we are engaging with staff and we reiterate our commitment to bring just the market reality to their attention and are looking forward to engagement with regulators to drive smart regulation, to provide the clarity and to enable our product growth.
Okay, let's turn to some questions that we received from our investors. We had a number of questions this quarter, including some of the top voted ones that deal with the topic of decentralization and applications like DeFi, NFTs, Web 3.0, and others. Brian, could you help our investors understand a bit more about that shift and talk about the investments Coinbase is making here?
Yeah, sure. So, it's funny, for a long time, Coinbase was founded probably about 9 years ago, and people would always ask me,
recording in progress,
use cases, aside from trading. And the good news is that, we're now seeing tons of use cases pop up in crypto. Some of them were mentioned, DeFi and NFTs and all the third-party dApps or this Web 3.0 concept. There's literally hundreds of startups out there being funded by top-tier VCs with really great founding teams. It's kind of like basically the dot-com startups of the internet era. And so there's tons of use cases out there that are being created. And with Coinbase as the primary financial account for many of these people participating in the crypto economy, they of course want to take those assets they're storing with us and go use them with all these different new applications out there, these third-party applications. So what do we need to do to make sure we can enable that? Well, with Coinbase Wallet centered around a self-custody app, you can go participate in all these things, DeFi, NFTs, third-party applications, and a number of our customers are taking advantage of that. But how do we bring that functionality to the main Coinbase app, the one that has the majority of our users? Well, that's the next thing that we're working on. And so we're doing that with a kind of crypto app store, if you will, that's to be built right into the app. We're also doing some work to re-architect our hot wallet using a technology called MPC, or multi-party computation, which is going to make our hot wallet compatible with these dApps or third-party applications. So there's some really important engineering architecture work happening there. And just the concept of embracing decentralization is bigger than just NFTs or DeFi or whatever the hottest thing is that's happening this month in crypto. It's also about us embracing a global mindset. We are trying to build a company that enables people all over the world to access the crypto economy. So we're doing a lot of effort in international expansion. It's also about enabling all the new assets that are being created in crypto. Like I mentioned earlier, we really want to be the Amazon of assets. We actually added 22 assets in Q2, which was great. That was the most we've ever added in a quarter. But we need to keep scaling that. I think there's eventually going to be millions of crypto assets out there. You could imagine there's going to be a crypto asset for every crypto startup that wants to get created and who wants to raise money, or if every kind of individual might create a coin, or there's NFTs, and there's so many new assets being created that we eventually need to support millions of these. And so there's a lot of work going into how we scale that process internally and make sure we're ready for all of that growth.
Great. Switching gears a bit, we got a question about asset listings. So Sean Horgan over at Rosenblatt Securities asked about engagement and activity on Coinbase after the introduction of Doge last quarter, and how that approach has, if that approach has changed as we look at new assets. And Brian, could you just overall expand on our approach to asset listings in general?
Yeah, so no major changes as a result of that asset listing, but that was one of the 22 that we did in Q2. Our overall approach is we're agnostic about which assets are going to win. We really just want to support every asset that's legal for our customers, and we have a very rigorous process we've created on the compliance and the legal and the cybersecurity evaluation of these assets to make sure they comply with those standards. But once we get comfortable with that, we want to list every asset that meets those listing criteria. Bitcoin and Ethereum still make up about 50% of our trading volume, and the other 50% is kind of the long tail of all the other assets that we support. No single one of those long tail assets accounts for more than 10% of our trading volume. So it's really starting to become quite a diverse set of assets out there. And in any given week or month, there's something interesting and happening in one of them, and it tends to trend up or down. So we never know which one is going to be there, the active one that week, but we know that we need to support the entire ecosystem of assets out there for our customers.
Great. Brian, several shareholders asked about our institutional business and how Coinbase's offering is not only differentiated relative to other service providers in the market today, but also how you believe the product evolves over time as more established players enter the space. Could you talk a little bit about that?
Yeah, sure. So I'm really excited about our institutional product, and it's going super well. Like we've now basically become the dominant institutional platform out there. We're serving customers like SpaceX and Tesla, also PNC Bank, Third Point, and WisdomTree. Alicia mentioned earlier, 10% of the top 100 hedge funds by AUM have now onboarded with our institutional product. And so, we're just really excited about this product. The asset managers, corporate treasuries are now using this product, pension funds. So it's really quite a lot of adoption that we've seen. And so the question asked about why are they choosing Coinbase? What's defensible about it? So I think the main thing that's defensible is that we are really the fully integrated solution here, right? So people not only trust us to do custody and store crypto assets, but we also have our prime brokerage product integrated, so they have the full suite of products there in terms of our smart order router, which connects into more than 10 venues to get best liquidity. We also, have a number of products or services for them like post-trade credit. If they want to do staking on those assets and earn yield, or if they want to participate in the governance of some of these blockchains, these are all features that our institutional customers ask for. We've also integrated our market and on-chain data analytics product in a way that's providing them a lot of value. And so we basically have this one-stop shop where you can store your crypto, trade it, earn yield, do post-trade credits and things like that that are needed all in one place. But I think it also really helps that we've established ourselves as the first public crypto company offering this kind of service. It's now larger companies are much more comfortable trading with us. And the work that we've done to create this product is really difficult. People sometimes don't realize that integrating with all these different blockchains, doing transaction monitoring for compliance, storing these private keys and material in a way that's distributed globally, so it has redundancy and consensus mechanisms, and it's audited and pen tested. This is all a really core differentiator for us. And so the last part of the question really just asked about what's going to happen as more established players enter the space. I mean, first of all, I think we're really excited about that. We want every single financial services company out there to enter the crypto space because we believe this is going to be a huge part of the economy in the future, a substantial portion of global GDP. And so we want every bank and financial service company, fintech out there to integrate crypto if they haven't started already. So I think this is partially a competition for us, but it's also partially an opportunity because one of the things we're building is called Coinbase Cloud. And this is kind of our AWS for crypto product. It's taking all those difficult things that we've had to build that I mentioned, integrated with blockchains and transaction monitoring and custody and everything, and exposing those through APIs in a way that any third party can actually build on top of those services, those APIs to get to market faster. And we're seeing interest from a number of those financial service players, for instance. And so I think that, we may have an opportunity to actually create a big business out of that as more and more people enter the space and not have it just be purely competitive.
Thank you. Alicia, investors often ask about our marketing efforts in the wake of the incremental investment we spoke about last quarter. Could you outline our marketing efforts and what they've looked like to date, what we've learned, and any clarification on the marketing strategy for the remainder of the year and beyond for Coinbase?
Thanks, Anil. So yes, our marketing spend has grown, and we grew about 65% quarter over quarter, so we're definitely ramping up our efforts here. To date, our spend is primarily centered on paid media on digital channels, and we believe this step up in marketing was a key component of the growth of our MTUs this quarter. As we look forward, though, we plan to really ramp up additional marketing investments in 3 ways, with the goal of driving brand awareness, growing customer acquisition, and increasing our customer retention globally. You're going to see us focus in areas of brand awareness like partnerships and sponsorships. We're going to look to new strategic channels and new venture channels for us, which could include TV or out of home, also the digital space. These are going to be fundamentally new marketing channels for Coinbase, and we expect them to perform differently than the optimized core performance marketing we've invested in to date. What we're looking to do here is test. We need to learn and iterate to get the right balance between optimized and new channels to drive additional growth and return on our investments over time. We believe all these new investments in brand campaigns and strategic and venture channels will drive the full funnel customer growth and bring more and more people into the crypto economy, which is really our long-term goal of driving 1 billion people into crypto and creating economic freedom. As we look to the rest of the year in terms of spend, we've left our outlook unchanged, and we believe sales and marketing expense as a percent of our net revenue for full year 2021 will range between 12 to 15% of our net revenue.
About half a dozen shareholders inquired about topics related to our capital allocation principles, how Coinbase evaluates investment opportunities, how we fund these opportunities, and ultimately if and when capital may be returned to shareholders. Alicia, could you provide a framework for helping investors understand our approach to capital allocation?
Happy to. So we are a high-growth company, and we are in what we think of as the earliest days of a massive global opportunity to bring crypto to 1 billion people. As such, we think it's the best opportunity to put our capital to work in our growth flywheel for product development, to add users to our platform, to add new assets to our platform, and build the exciting product roadmap we have. We invest this resource in a 70-20-10 framework, thinking about 70% as a percent towards core work, 20% to strategic investments, and then 10% to innovative new ideas. We also think about investing both organically and inorganically, and we think about using our capital for the potential for opportunistic acquisitions in service of our product roadmap. When we think about the use of our cash overall, then it's to fund our operations, just core business operations. We also think of it for strategic purposes. And lastly, what we would think of is for investment cash. We're very mindful that crypto is volatile, and we want to ensure we have enough cash and resources to weather any prolonged crypto winter cycle and still be able to grow our business and execute on our business goals. So as we said previously, we have no intention of any near-term return of capital to shareholders in the form of a dividend or share repurchase.
Okay, thanks. Brian, customer service continues to be a hot button issue and a very important topic for many of our shareholders and consumers. What would you tell shareholders about the state of customer service at Coinbase, and what are we doing to address ongoing customer concerns?
Yeah, well, with all of this hypergrowth happening in the last couple of quarters, you can imagine this has been a big focus for us. So proud to report that we are doing much better, but there's always more to do. We've increased the headcount 5x or so since January, beginning of this year, working on support specifically. And so that means there's now more than 3,000 people dedicated to solving customer support issues. We're also rolling out live support for customers via chat and phone later this year in a more robust fashion. So some of these things, along with just improving our education resources, making sure the health center is up to date with all the latest features, these are all investments that are happening, and I think we'll continue to make progress there.
A few investors honed in on the consumer financing products we brought to market recently, like Coinbase Card and Bitcoin Borrow. Brian, can you talk about the vision for those offerings, early learnings from how consumers are engaging with them, and how and when we intend to expand those programs?
Yeah, sure. So Coinbase Card and Coinbase Borrow are both examples of what we think of as expanding the crypto economy, right? It's this trend that we've talked about where crypto started off as something that primarily people were trading, and then they thought about, hey, what else can I do with this? Can I spend it? Can I get a loan? Can I earn money with crypto? And participate in the crypto economy in a broader way, doing all the things people might do with money eventually. So the Bitcoin Borrow feature is a great way that we've allowed customers to secure a USD loan using their Bitcoin as collateral, and it's been great to roll that product out. Coinbase Card is allowing customers to actually go spend their crypto on a debit card anywhere that Visa is accepted. So one of our goals long-term is how do we get more and more commerce transactions for goods and services in the everyday economy happening with crypto. And there's a few things that need to get in place for that to happen. One is that you need to get the blockchains to be more scalable, and so there's some work we're doing behind the scenes on that. The other is that we need to get both a set of merchants and a set of consumers who both want to spend crypto. So that's kind of a two-sided marketplace, a chicken and egg problem. And so Coinbase Card is a way for us to dial up one side of the two-sided market by allowing, you don't need the merchant to specifically accept crypto. They can, as long as they accept Visa, you can spend your crypto with them. So we'll dial up one side of the market, people spending their crypto. And once we get that to be larger, we can then go see, who are the merchants accepting the most payments in crypto, and then we can go direct to those merchants and say, hey, maybe you'd want to think about accepting crypto directly and see what kind of fees you can set and things like that. So that's a little bit of how we think about it, and it all fits broadly under this concept of how do we grow the crypto economy, how do we get people using crypto for more and more things, all the things they would use money for and value for traditionally, but also probably some new ones which don't have a direct equivalent in the traditional economy.
Okay, great. I think we're going to have time for one last question here, which comes from Owen Lau at Oppenheimer about fees. Alicia, you mentioned before Coinbase doesn't compete on fees, but could you elaborate on our reported fees in Q2, as well as thoughts on both fees and spread going forward?
Yes. So you are correct. We have said before that we do not compete on fees. And instead of focusing on being the lowest price platform, we focus on providing the most value to customers. So our custody, our security, and storage, in addition to trade execution, which is critical for bearer instruments like crypto. On the retail side, these services are bundled into our transaction fee. We're really competing, though, for these users based on the product suite. As we shared earlier, our users continue to further engage with the crypto economy in non-trading products like staking and earn. These types of services, new assets, new ways to engage with crypto are what attract users to Coinbase. If you look at retail transaction revenue relative to our retail trading volume, you will see that our weighted average retail transaction fees were 1.26% as compared to 1.21% in Q1, driven by a mix shift between our customers. We saw more volume on consumer versus pro in Q2. I'd also remind investors we report matched volume. On the institutional side, customers are choosing us for our deep liquidity and the integrated product suite that Brian spoke about earlier, as well as our heritage of security and compliance. If you look at our institutional transaction revenue relative to our institutional trading volume, you'll see that our weighted average fee was 3 basis points as compared to 4 basis points in Q1, driven by our tier-based pricing and the higher volume that we saw in Q2. We haven't made any broad modifications to our pricing in some time, but we are constantly running pricing experiments and testing if there are opportunities to better serve different customer segments with different pricing models.
Great. Well, thank you. And so with that, I think we're done. Thanks, everybody, for joining us on the call today, and we'll talk to you again next quarter.
And this concludes today's conference call. Thank you for participating. You may now disconnect your lines.
Man, very muted. Like they need to have a little bit more energy on this thing, huh?
They were reading off a script, so
it's like, come on, be like the Peloton CEO, buy this stock. Like you're missing out.
Man, where's the energy,
Yeah, it's like, come on, man. Come on, Brian.
So they already received the questions in advance, so they just kind of read off the answers, and they got a chance to kind of package it together in a script.
Yeah. So all those questions, we already knew all of that. This is important stuff. I have on the screen right now. So it's their net revenue Q2 $2 billion, I believe. This is in billions. Or Q1 was 1.5 or 1.6.
Yeah, that's 2 billion. Yeah. That's so 1.597 billion, and now it's 2 billion.
Yeah, so that is.
This
stock
is
by the way. Is rising slowly. Stock is rising slowly.
There's a 29% gain revenue, and let's see what net income is. That is 771 million and 1.6 billion.
Like, what I don't get it is, like, the Wall Street is trying to suppress the stock as much as possible. Like, I'm noticing that, but it's only a matter of time before it just blows up. Like, because with, right, like, look at this. With your revenue at 2 billion, net income at 1.6 billion, adjusted EBITDA at 1.15, right? This is kind of a no-brainer. Like, what kind of multiple are we trading at right now? Nothing. Like, are they not seeing this as a big tech company that is going to revolutionize?
Dude, he's going to crush all the banks, dude. I should have bought the shares, man. But look at this, 29% gain quarter over quarter net revenue, 108% gain quarter over quarter net income. I'm not sure what EBITDA is.
EBITDA, earnings before income, taxes, depreciation, and amortization.
Oh, okay. I guess that's an important number.
Yeah, like EBITDA is like pretty much the financial view. Like that's what it's looked at, right? EBITDA is your final number before income tax, depreciation, amortization.
More importantly, they beat expectations, right? And I think they did. I believe there was something to the effect of their next quarter's outlook, right? It wasn't up to the par, I guess. Number of users slowing down for the next quarter or something like that. I was reading in Yahoo Finance.
Yeah, that's the problem, is that they're being conservative. So what I'm not getting is Wall Street is not picking up this pretty fast. So I just am very strongly opinionated. It hit 275. We can go back to our recording. Like you could see like our discussion we did on, you were there, Jeet, right? When I said 275 is a no-brainer, it did hit 275. So
Yep.
yeah, like this is like, if it didn't reach 275, that means that they're now manipulating it on the downside. They're undervaluing this big time. So
Someone's saying,
Yeah, it went to like 280. It was 281, 282, something like that.
yeah, well, I'm not even looking at. I was like, bare minimum, it has to be in the 270s at least. Like, it's a no-brainer just because of the financials. But they're squeezing it down. They're not letting this have a multiple on it.
oh, I should have got the shares, dude. I had like 400, 500 shares. So the options. Okay, look at this. The trading volume.
But I have options too, Leon. But I have options 528 days. I have like 2023 Jan options. So that's better than shares.
Well, mine got crushed. The September 400s got crushed. They're still crushed. They're probably still crushed.
Yeah, but what I'm saying is that if you buy the 2023 options, they won't get crushed because there's like several years to go. So
Coin value, fair value of 150. Ghetto snipers, you're crazy, dude. This is gonna be $1,000 stock, bro. Okay, let's look at trading volume. Retail.
Hopefully it'll bounce. I mean, it's rising, so hopefully tomorrow it'll bounce.
Yeah. So retail, 120 to 145 billions, 140 billion. That's the volume. It's the trading volume. Yeah, I mean, obviously it's up. Institutional, look at that.
Look at that. Yeah, those are big growth numbers, like in institution right there. That's 100 at least, 100 up.
Okay, so yeah, let's see what the numbers are on this. So retail,
100 billion.
There's a 20% increase in retail. The institution is 47% increase in institution. So 20% increase retail, 47% increase.
I like the way Ethereum's growing, buddy. All my money's in Ethereum right now.
Dude, look at this. Look at the trading volume percentage of total. Bitcoin was 50. Huh?
Yeah, look at how much Ethereum has taken away from Bitcoin.
Yeah, I know. Yeah. So it started out December, basically January. 57% Bitcoin, 15% Ethereum. Now Bitcoin is 24% of the total, and like switches. Ethereum is the biggest. It's all on their platform. It's the biggest on their platform right now. And then there's an increase in 50% in other assets and smaller coins.
Mm-hmm.
Dude, the trends, dude. This is like fundamental trends right here. We all saw the social happening with the NFTs and DeFi. We saw all this happening. And all the Bitcoin maxis screaming out. Like that's the social signals to everyone who's watching from Dumb Money. That's the social signals. You see the technicals every day, and here's the fundamentals.
You want to know something, Leon? If this is like, I'm sorry to say this, I'm sold on coin. Like, even though you don't have a position, I have like 10 contracts at 2023 I'm going to hang on to.
Hang on.
Like, they had Q2 earnings. We're talking about April, May, June, okay? And we're talking about a phase or time frame where Bitcoin was stalling for the longest time. Ethereum was stalling and going down. Like, if the financials are so strong, even in a bear crypto market or a like sideways crypto market, what does that tell you on a bullish crypto market? Like, all this bullishness that's happening in crypto is all Q3.
Yeah, Q2. We had a drop. The April-May drop.
And that is included in these numbers.
Yeah.
And they're still growing despite that.
Dude, and the second half of this bull market just started. Last 3 weeks to a month now. Incremental growth. Okay, let's see what this is. Top line, net revenue, 1.8 billion versus 1.45 billion. Institutional up 20% basically. Custodial fees up. Blockchain revenue up. Earn campaign revenue up. Interest income doubled. Other subscriptions and services up. So they doubled their revenue. I think we already saw that, but that is 56.4102.6. Yeah, 81% increase in total transaction revenue in a quarter. So let me write that down too. 81% increase in total revenue.
I have a question.
Yeah.
A few minutes ago, we talked about how Wall Street is pushing the price down. I don't get how that works. Wouldn't they be selling the shares that they have in order to drive the price down?
Yeah, you short, so you borrow shares to sell.
You're short selling, so you're going on the opposite side with a lot of money.
Yeah,
wow. So there's that much money that they can short sell that many shares to.
Oh yeah. Like nothing even all those what do you call
hedge funds?
No, not hedge funds. What do you call
hedge funds, yeah.
What is that group that was?
What?
No, not Citadel. The group that Wall Street Bets.
Wall Street Bets is not shorting this.
No. I'm not saying they're shorting. What I'm saying is Wall Street Bets is only successful in low volume stocks where there are only one or two Wall Street guys. You can, if you combine all the Wall Street folks together, it's a force that is inevitable. Wall Street Bets could only knock down just like what do you call a GameStop or one-off stocks that were not even heavy in volume shorted in on the Wall Street side. So they could come and like knock them down, but you can't knock down the big market at all. Like especially big companies like Coinbase against Wall Street because the monetary force that is shorting is too much that the bulls will get crushed, kind of thing, on the option side.
Yeah, let's see if we got any info on.
And the only survivors in this is those who can just wait it out, and just like keep waiting and have a lot of patience in it. If they have long-term position, if they have short-term position, they're going to get squeezed out and out of money. Pretty much.
Yeah, I'm looking at this right now. Like short interest has gone up day over day on Coinbase.
They're playing they're
constantly shorting it. Yeah,
they own the bank, so they're running it pretty much.
Yeah, 1.2 million shares today short, 1.5 million shares short yesterday. So what that does, it crushes when you borrow to sell shares, which lowers the price, and then you have to close your position eventually, so that they buy back lower. So what is that? 1.2.
So they borrow at a higher price, so they would then borrow at 300.
Yeah.
And sell it all the 300.
What's
and then when it comes down to 250, they'll buy it. Okay.
What's Coinbase price at? Let's see.
Right now it's trading at 273.
273. Okay, so basically 300 something million short today. But
Can you imagine it went all the way to 280 yesterday, and then they were just like kind of just dumped it pretty much.
Yeah, I'm thinking that, but yes, I still think that drive was probably some retail interest finally pushing it back up, because I didn't see Kathy buy again. Kathy from ARK Invest, I didn't see her notice her buy. So that short easily squished all those little guys out, unfortunately. But but yeah, long term, I'm still bullish on the stock. I still think this is $1 trillion company. I'm talking about over 1,000.
Like the volume for the institution is going to drive. That's like the big whales of the new big whales coming into Coinbase, right?
Mm-hmm.
They're leading. They're not going to give up market share so fast because there's nobody up at that caliber, at that level yet. It's Coinbase, so it's not that mature for there to be.
Oh, dude, yeah, look at that. It was 260 after hours. It was right above. It was right below this channel line. Now we're back.
I remember we were watching this and we just drew a line at 275.
Yeah. So a lot of volatility, obviously, into earnings. Yeah, a little gap up, but.
I had picked up for August 13, 300 calls. Not down too much, down like 25%. If this keeps going up a little bit toward 280, 290.
Yeah.
Next couple of days.
When Bitcoin is back to 65.
That's the one you were kind of like debating, right? On the call when we were in your mind.
No. This one I had just picked up like a couple of days ago. Maybe even yesterday, I can't remember. Or maybe 2 days ago, something like that. I have the same as you. I have a January 2023, but I have 400 calls. That's up 43%.
Yeah.
Somebody said Cardano smart contracts out Friday.
Oh, really? Cardano is going up.
Oh,
though.
dude, 160, like, it finally broke out of this sideways kind of ugliness.
Yeah, here you go.
Yeah, 167. Look at
Fortunately, I
that.
just put $5,000 in that. Wish I put more.
Nice. Let's look at dot.
It's in the 20s, right?
Yeah, still 20. Yeah, that's fine. I bought at 10, sold at 19, bought back at 18, so I'm back in dot.
Wish I put more in Cardano, man.
That's up 13%. Damn.
Yeah, I know. Let's look at, what is this? Let's go to 15.
Now we have $1,000 in there.
Yeah, I was being skeptical. I just put $5,000. That's it.
Alright, so Cardano.
Yeah.
Yeah, it did a 6%. Now it's at 4. That's still a good move. But yeah, so Coinbase. Here's Coinbase chart. Let's put it.
Or in the side.
What was that?
You can move forward a little bit. Oh, sorry about that, guys. Let me go mute.
Oh. Bitcoin's at 45. Nothing interesting. By the way, guys, if you look at this YouTube channel, go back one video. I posted a video podcast about my trade on Coinbase call options, how I got wrecked and why. My thesis is right. My timing was wrong, and I let FOMO blind me because this was end of May. Oh wait, no, start of May. No, it was April 14th, April 15th, basically. April 15th, the IPO happened with Coinbase. I bought the shares. I shouldn't have bought the shares. I wanted the options. Options came out 1 week later. Immediately bought the options. I should have waited 2 weeks. Lost 6 figures, but that's fine. We're gonna make it back, folks. We're gonna make it back trading crypto and options.
Yeah.
Nice buy on ADA, dude. What did you get in on ADA?
Let me tell you what my ADA price was. This was a while ago. Coinbase.com.
A while ago, so that's good. You can just tell me, like, was it like the start of August 1st?
I don't know. It was a while ago. Really a while ago.
Oh, you're good. You're good. Okay. Coin 272. Let's see what. Yeah, let's open a trading view. Tasty works. Dude, I'm thinking about trading hood options on Robinhood. What do you think? Just cause. Oh wait, these options it's yeah, they're not gonna be. Oh, let's just look at the December. Oh, look at that. I was in the 300 and the 350s. What's a 400? 400 is almost not 900, and then the 500s. Yeah, 500s didn't move. Right. All right, recapping peeps. This video should be uploaded eventually. I am recording this, so don't worry. I'll upload it. Actually, I'll cut out the first half because I had audio all messed up.
Yeah, ignore all my opinions because they're not professional.
No, your opinions are awesome. Like they are professional.
Oh boy.
So what do you guys think Coinbase is going to do tomorrow? Based on what seeing today.
I think it'll back up tomorrow because here's the thing: is the shorts have done their shorting through earnings, right? So their volume is already in. So I don't know if they're going to come back in and short more. The chances are very slim that they would come and short more on top of that. If they do, it's that they're not going to put too much money against this at this point. If they do, it'll be very minimal. But I think there's going to be a bunch of hedge funds picking up this over time, going on the other side of the fence, pretty much.
Mm-hmm.
Like, look at these results. They're blowing out of the water during a bearish / neutral, time frame.
Mm-hmm.
That can't get any better, Leon. It can't get any better.
I know.
Like this just proves what I said at the beginning, that Coinbase is still gonna make money even though you have a bearish cycle going into it because they're making a shit ton of money on fees. That's it.
Yeah, and increased trading volume, guys. Don't forget, like institutions can short on Coinbase. Retail can't, but institutions can. And again, so
that's why I'm sticking my consensus on coin. I'm not going to let it go. I'm just keeping it.
Yeah. So again, 29% gain quarter-over-quarter net revenue, 108% gain quarter-over-quarter net income, 20% increase in retail, and 47% increase in institutional. Trading volume. They traded more, guys, in quarter two. And this is interesting here too. Trading volume percentage of total. Bitcoin, again, recapping, it was 57% at the start of the year of trading volume. Ethereum was 15%. January, I flipped to mostly Ethereum because of what I was seeing with DeFi, NFTs and stuff like that. Now, quarter two, it's 24% is Bitcoin and 26% is Ethereum. And there's an increase in altcoin trading too, 50%. From 20.
I bought it at 129.
Oh, nice.
5,000 on June 23rd. ADA. I bought Dodge too, but it's not doing good. Those are the
Doge
altcoins I bought. Pretty
Gotcha.
much.
Awesome. I wish Frank was here. Frank Macretus. He would have been. Yeah.
Yeah, I haven't talked to him in a while.
Yeah. You should text him if you got his number.
Yeah.
All right. What's this last paragraph? Da-da-da. Coinbase worth in after hours 0.75%. Not a haircut. Yeah. This was excellent. Cool. All right. Thanks for watching, guys. I will upload the stream. Let me stop sharing. And
All right. Take care, Leon.
take care, guys.
Take care, G, then.
We had a stonk and crypto guys. Bless